Whispers in the static, questions in the fire. The veil is torn and the seeker never tired. Scrolls of the ancients carved into stone. She reads between lines while the empire grows. The priesthood of medicine, prophets of law. She claws through the curtain, exposing the flaw. No map, no guide, just shadow she tracks. Every thread pulled is a world turned back. The faithful will know, though the words may be few. To the blind, every truth is a riddle untrue. Claws of reason, eyes of flame, unmasking the player in the shadow game, where the silence breaks, the hidden shake. She names the unspoken, the world away. Historian's eye on the ruins of men, cycles repeating again and again. Digital soldier, a phantom, a spark, a voice through the wires ignites the dark. Voice of iron, breath of dust, piercing the empire built on rust. Keeper of the flame, she stakes her claim, illuminates the nameless, calls them by name. Through Babylon's towers, through Rome's broken gates, she carries the question that history hates. No creed, no tyrant, no mask will remain. When the feisty one whispers your true name. Claws of reason, eyes of flame, unmasking the players in the shadowed game, where the silence breaks, the hidden shakes. She names the unspoken, the world away. For those who believe, no words are required. For those who do not, none will suffice.
Good afternoon, everybody. I am excited about today. I've been working on this one for about a little over a month. I've already shown you pieces of it where I've been showing that the financial system is in distress, why it's in distress, all the players to the financial system. I will finish out this series, by the way, next time. with showing you how the system is even showing us accountability. But for today, I wanted to focus on the systemic breaks. They're not accidental. They're actually mechanical. And triggers in the system are actually planned or encouraged. What would be the best word? I can't think of the best word. But I'm going to start with introducing my Zoom chat, my Telegram chat, rather. I'm sorry. And here we go. It's not showing the right Telegram chat. Hold on. I got to fix that again. Properties. There you go. Okay, so in this show today, I am actually going to show how to navigate what we're watching in the, I guess, the real world, I guess would be the best answer, right? And so far we've got Victoria, Danny, Angela, and Planet in the chat. I've put all of these people officially on notice. Oh, and here comes Jerome. I cannot see what's being said in that chat. I am watching both Pilled and Rumble, but I can't see the chat. So if a question comes up, I'm going to ask one of you guys to interrupt and point out that question if you don't mind. Because I only have 3 screens. I guess today I found out I need 4. So let's start with my title slide. What does that conjure up for you? What do you guys think of this slide? Isn't this kind of like cool? Did you think we'd ever be talking about this? Anybody? Come on, Telegram, speak up. Nobody's speaking up. Do you hear this? Do you hear what I have to put up with, Pilled and Rumble? Everybody stays so quiet. Everybody's so quiet, and now I just found out why, because I was muted in my Telegram chat. Hopefully they heard me on the actual show. I'm asking, what do you think of this slide? Isn't this the bomb of a slide? Isn't this really what's kind of been on everybody's mind? How do we get here, right?
What we've been waiting for.
Yeah. I'm really excited about this. By the way, Just Fed Up gifted me a ship. Talk about starting out big. She did. I think I owe it to you to deliver big, don't you think, Just Fed Up? Thank you so much for that. I appreciate it. So today I am going to show you how systemic breaks in a system are not accidents. Okay? They tend to be mechanical, and you can kind of control some of what happens in the system because liquidity is really what the problem is. Remember last week I showed you this global layer, and I showed you how the Brussels effect are the rules, the global order, right? They're the rules for the system. And the layer, the base layer is the pipeline, the plumbing for the financial system, and so you got the Brussels effect on the bottom, and you've got the City of London. The pipeline is in the middle, and up on the top is the U.S. because everything trades in U.S. dollars, and because of that, our dollar is the proponent for security, for stability, right? So it's critical to all funding across the world. And that criticality is where we are now, because when the LIBOR to SOFR event happened remember I explained to you, and I will do it again with accountability, but there was a huge LIBOR, LIBOR, a LIBOR scandal that broke out in 2012. And we are now, instead of using LIBOR, we're using SOFR, which puts the cost of money in the Treasury's hands and not some willy-nilly bank-determined cost of money. So we're going to start with this. This is the structure, because if you don't understand what actually holds the power in our world, then Nothing else is going to make sense. At the base, like I said, you have Brussels. They're the regulatory brain. They write the rules. They define the compliance. They determine how access is obtained throughout and within the global system. At the very top of that sits the City of London. That's kind of like the circulatory system, the plumbing. That's where capital flows and contracts are written and liquidity is distributed. And then above that is the United States. The U.S. is not just a participant here. It's an enforcement and liquidity layer. It controls the dollar funding, the reserve currency, and ultimately whether the system is going to function or not. And that puts the U.S. in a unique position from a global power perspective. So think of it this way, to look at it. Brussels writes the rules, London runs the system, and the U.S. gets to decide whether or not that system's going to work. So when you're thinking of this, thinking about the U.S. in our unique position. Here I invert that stack because I want to flip the perspective, because while power sits at the top, stability actually comes from the bottom. Stability is liquidity. At the foundation is the U.S. dollar liquidity. Everything depends on that. Above that is the financial plumbing, and then primarily you've got the Brussels effect, the power or the capital or the rules that allow that capital to move. And so that regulatory power is an important aspect. And the key insight I'd like you to get out of this is that if liquidity, the bottom layer, weakens, then nothing above matters. It doesn't matter what the plumbing is. It doesn't matter what the regulations are. The rules don't save the system, because why? Liquidity does. It's always about liquidity. And that's where I wanted to kind of come at this. LIBOR, globalized dollar liquidity. SOFR anchored it in the control of that liquidity into the U.S. Funding markets. So we now have quite a say as to where we want to go with this. That takes us to a layer that I did not define when I talked about this last time. That layer is called the enabler layer, because this is the layer where things happen, but nobody can stop it. Why? Because most of the time, you can't see it. It doesn't show up. You know, accountability is transactional. When you're talking liquidity, it's transactional. So you can see an account opened, you can see money flow in and out of that account, but it doesn't necessarily show you who did that. And so it's important to talk about this layer, because this is another real key piece. It's fundamental, where you've got rules setting the game, which is this global layer here, and then the market's deciding where that goes. Then reality determines what actually works, right? The physical reality is trade, and everything else, even the enablers operate outside that structure. So if everything is going to break, it won't break at the top. It's going to start where liquidity meets reality, and that directly affects all of our enabler levels. I hope that makes sense. Preset points, hey planet. Okay. I tried to sneak in and see what the comments were. I should have not done that. I apologize. But nevertheless, this piece right here, because when things start to get risky, the system isn't working as intended, enablers tend to take on the weight, and they tend to move money themselves. And this is where all your private equity comes in. This is where your investment houses come in. And they're made up of lawyers, accountants, all of your shell networks that we've gone over in the past, all the shadow banking flows that we've seen. These are your enablers that are operating through this existing system to make sure that money flows. Remember, the reality is it needs to flow quickly. And when the rules get oppressive, or when there's an issue within the global markets, they tend to operate outside that. So where we're at now is looking at, well, what happens when liquidity gets pulled? If the U.S. pulls liquidity, what actually happens in that situation? Systems don't break because of their structure. They break because of the pressure they feel. So the question becomes, how does liquidity actually get pulled from the system? Well, first, you price the price of dollars rises, right? That's the interest rates. Funding becomes a lot more expensive. We saw that maximum pressure on Iran, right? And then second, the balance sheet capacity then will tighten. There's less capital available to support any of the markets. And then finally, or third, you need more or better collateral to even access funding. So, where you need something that's a bit stronger. And fourth, finally, you got funding strains start to appear, and dollars then flow in the reverse. Instead of going out into the market, they're coming back into the U.S. So the system does something important. It really withdraws its own liquidity. Capitals flow back towards the U.S. dollar core, and that creates scarcity around the world, we're already seeing that in the dashboards. And that scarcity forces capital to move faster than the system can absorb. And I know that may be a bit difficult to understand. Just bear with me. You'll start to get it. You'll start to get it. I promise. Let me first go into why this is familiar. Because it very much is. What's familiar is 1873. I tried to explain it before, and I got a feedback that it was a little bit confusing. So I'm trying to do this again, because what we're going through right now isn't new. This is a replay of the same story. In 1873, we had a system like now that expanded too far. The liquidity tightened, banks failed, trade collapsed, and economies all over the world started to contract. Today, those same pressures are happening. Liquidity is tightening, geopolitical constraints have formed, and funding is stressed. I'll show you that in the dashboards. But there's one big difference. The system today isn't breaking immediately like it did in 1873 because it's rerouting through those enablers. They're trying to keep up. At some point, they're not going to be able to absorb that shock. And I'm going to show you how I think we're getting there. The fact is, the core of the problem is we're just like then, we're using short-term money to fund long-term projects or assets. So that money can leave tomorrow, short-term money. It's funding things that take years to complete, though, and that's why there's a problem, because once people start asking for their money back, they find out the money's not there. It's tied up in all these long-term projects. And when they do, there's not enough liquidity when they ask for their money. And what you've got is a system promising short-term access to money that's been locked up for years, decades even in some. And that is the mismatch that is then in 1873. That is the exact same mismatch that we're seeing today in 2026. It's that hidden part of the system that's fragile. Let me explain that a little bit different. Imagine you're building a house. It's going to take 5 years to finish that house. But the money you're using, you have to start paying back tomorrow. There's a problem there, right? Because you don't actually have an asset. And on the global scale, railroads, real estate, private credit, infrastructure, AI, even today, all of these projects are long-term build projects using money from today. So money that goes in now, but you're not going to see returns till much later, creates a problem in the system, because that money can be pulled back at any time through bank deposits, investor funds. Investors can withdraw, and you got maybe even short-term loans. That creates an expectation that money is available on demand when in fact it really isn't. And the problem is you're using money that can leave any time out of the system to fund things that can't even be sold or finished anytime soon. So that's where things go wrong. Everything is fine, like I said, as long as nobody asks for their money back. The moment they do, you can't sell. You can't sell a railroad. You can't sell a private credit deal. You can't turn any kind of a long-term asset into cash fast enough. And that's where the system runs out of liquidity. So it's an identical pattern from 1873 as it is today. This is why banks break suddenly. This is why the system just goes into utter collapse. It looks stable until people ask for their money back. And that actually has a name. It's called the Vienna moment. That's when liquidity mismatch is exposed. And so looking at the Vienna moment, what is it? Why did it get that name? Well, it's because back in 1873, that's where everything started. Every systemic crisis has this moment. We've seen it over history. You can plot it, where stress stops building and starts cascading into a catastrophic event. And in 1873, that was in Vienna. Not because Vienna was the global center of the world, but because that is the place where hidden stress was forced into the open first. Capital had been flowing aggressively into long-term illiquid projects or assets, and confidence was very high. Liquidity felt abundant. But underneath all of that, that same mismatch we see today was already there. That short-term funding supporting long-term bets. And at that point, confidence began to crack. Funding didn't gradually adjust, it disappeared like that. And investors then rushed in to pull their money. And banks, of course, couldn't meet the need for the withdrawals. The money wasn't actually in the system in liquid form because it was tied up in these projects. It's the exact same story today. So like now, it wasn't a credit problem, it was a liquidity problem. And that's where the shift comes in. That's how the structure actually works. You know, when you break it down, once that break, that illiquid issue, the liquidity issue showed up, once that happened, everything else cascaded from there. You started to see redemptions beginning, and you saw selling started to become forced. Collateral became questioned, and people needed stronger, more collateral, and the funding markets all tightened all at once. And that's where the banks failed. Credit froze, businesses collapsed, trade slowed, and then finally unemployment surged, where it ended up in what they now call the Long Depression. It's the actual Long Depression before 1929, by the way. And it looked isolated and suddenly becoming a systemic problem. Once that started, it didn't move. It moved linearly. It actually accelerated. And each forced sale created more pressure. Each margin call forced the next margin call. And you can see how it just cascaded, right? Liquidity didn't just decline. It completely vanished. And then all of a sudden, everywhere at once. And that's why we went into what is now known as the Long Depression. It literally lasted, I think, 6 years. And then the reason it spread so fast was simple. Everything was connected through financing. And like I said, this is called the Vienna moment. So the point where we can no longer absorb stress and we begin transmitting that stress instead is where we're at now, which I will show you, because it can't be resolved very quickly or very cleanly. You're going to see some problems evolve. So here we go. I'm going to show you now how Beijing is actually one of the answers to our current problem. We just walked through something it's not just historic, it's a pattern. And that's what the pattern looks like then, and this is what the pattern looks like today in real time. We're now just less than 30 days away from the Beijing summit, and the same conditions we've seen before in past systemic breaks are again converging. If the previous slide showed you the system entering the Vienna moment, this slide is what it looks like as that Vienna moment unfolds. This is the point where intent becomes visible. First, the U.S. forces a blockade on Iranian oil and then introduces a real physical constraint into the system, not symbolic, a physical. It directly impacts energy flows, and that immediately exposes a dependency, and that's China. They're the largest purchaser of Iranian crude. So the moment the constraint is applied, the impact doesn't stay local, it spreads immediately. Trade then flows into a tightened format, and every energy flow that comes out from under that pressure, you start seeing that stress expand and build. And then, just like in Vienna, actors begin to move. The U.S. Ambassador to China met with Trump this past weekend in Newport. And at the same time, we find out that Xi is engaging with European leadership. The prime minister for Spain met with Xi today or yesterday. I believe it was yesterday in Beijing. These are not isolated, and it isn't by accident. They are responses to the exact same constraint. We've got a liquidity issue that's seizing markets. And so you've got actors in the system working through the constraints as they unfold. And that pressure we're seeing right now is, the financial tightening we're watching has become a geopolitical escalation. And like I said, it's not random. It's being applied at the exact points where the system is most sensitive. And that's because of where China sits in the system. Its position forces behavior changes across the entire system, to include Brussels and the UK. And that's the shift that we're going to go through mostly today, because this is what it looks like when the system no longer contains stress and begins to pass it through. And once that starts, it doesn't stay contained. But because stress exists, but because it begins to force behavior, we can begin to see how the markets are going to react to that. And a key thing to keep in mind that to remember is that these markets are going to react to something that they see as a positive sign of resolution. And we'll watch. I didn't run my dashboards today. I will later, because I've been running them every day and I didn't have time this morning. So what I wanted to highlight though is you're not just seeing a random collection of events. These events are all happening in a sequence because of the constraints that are entered into the system. But I'm going to go even deeper here in a minute, because knowing that constraints force behavior, can we impact that? I'm going to show you how maybe that's true. Because while constraints force capital to move, are actors actually repositioning, and are actors being forced into negotiation table? Could be. And now we have something more telling. It's a time horizon, because what did Trump say? He expects the resolution of this whole issue by the end of the month when King Charles gets here. So now we're looking at a Beijing summit, May 14th and 15th. But then we've got a timeline here with King Charles, April 27th through 28, 29, 30, May 1st, right? 27, 28, 29, through April 30th. So it's 4 days the king will be here. So once again, we're at a system that's reaching a point where the outcome is not going to be avoided, but I believe it's being shaped. And that's a key thing. And I bring that up because of Trump's infamous post on the 10th, world's most powerful reset. That's entropy, right? It's also a signal, but it's entropy. Because what he's doing here is we're watching how that outcome gets shaped. Because once that system reaches the phase where the stress can no longer be avoided, you can only determine how it happens. And the mechanism is not a political one, it's a financial one. So it's when the global liquidity tightens, but every layer of the system depends on that liquidity. So the rules, like I said, set the game. Brussels, and then you've got City of London, the plumbing, and all of the enablers are all eyes open right now. And knowing that energy sets all those real conditions, the real world conditions, are the impetus behind them. So nothing is functioning without the liquidity, and energy, of course, is the biggest draw on that. And remember, liquidity is in US dollars. So what actually triggers a reset? It's not a meeting, it's not a speech, it's not even a post. It's not even a single decision. It's when dollar funding tightens and banks start to pull back lending, credit becomes scarce, funding costs rise, capital stops flowing. It's all financial. So what did this do? Because what you've got now is a situation where, we're looking at a situation where Trump actually is inserting a comment that's creating an event, that's creating a reaction. And again, everything is forced to adjust all at once. So the reset, like I said, we saw it before. We even saw this in 2008 when dollar funding froze. But today, the stress is building in the private credit and shadow markets again. And it's following the exact same pattern because of that coordination with the system. And I'm just saying, when we're looking at this, most powerful reset isn't a decision, it's the loss of liquidity. So did Trump really cause a problem with this? Well, I went back and I rebuilt the funding dashboard, the financial system dashboard. This is a probability model. All I could do was scan the internet and try to rebuild this dashboard. I've got other dashboards because I didn't have this dashboard in place on the 10th. And what we found is that there was stress in the system, but it wasn't at a systemic rate yet. What we know is that you're seeing things in yellow. High yields were still green. They were getting a little yellow. But for the most part, money was still flowing. That's what this green is here, the funding stability. Everything else was beginning to show symptoms of stress, but this was still flowing. So the system had the illusion of stability, but there was stress in the system. This is on the day when Trump posted the most powerful reset, right? So this is the same day that that's happening. So the market knew to watch for something, is what I'm getting at, because we see that show up next. And with the volatility that was building, we knew that the system only looked stable, but the signs were showing something very different. The system itself was in a fragile state. And that's how all these signs align. And it took us to, this is April 12th. In the morning of April 12th, I ran my dashboard and I see that we've got basically a calm before the storm kind of moment. This is before things accelerated. This is where we shift from setup to real-time observation here. And I'm showing you the dashboard in real time as it was on the 12th. And I run these dashboards in the morning. So what you're looking at here is right before Trump's signal. It's not a forecast, not a model. This is the live state of the system right after escalation signals begin to appear. So here we show the 40 to 50% risk probability is starting to show up. This is after the 10th, but before his blockade statement. This is 40 to 50%. And that took us right at first glance. We're looking at things that look kind of stable, but the liquidity, the system is still operating, but there are stressors. You see this right here. There are stressors. These are warnings. These are red right here. Systemic buyers fading away. And we already know that. We saw gating activity increase last week. So now we're looking at a system that is definitely leveraged. And while it looks stable, it's showing signs at any moment now it could break. And that takes us to a really critical shift. What happens when a real constraint is introduced into the system already as fragile as this one? This is the last moment before things act or behave fairly normally. But what happens when this comes up? Now, this is two posts on one slide, but it's really two different events. If you notice, Trump posted and then reposted a minute later an entropy signal talking about a complete blockade of the Strait of Hormuz. It was 8 hours later before CENTCOM came out and said, hey, we're not blocking the whole strait. We're only blocking Iranian ports. All the other ports in the region will be fine. But this is a big deal because that signal here from Trump is important to take note. First, you have Trump's entropy. brings about chaos. It's a clear escalation signal. He's putting pressure, real world impact onto the system, even though it was a Sunday, which is convenient. So it didn't really translate into the markets. The markets still reacted, as you'll see next, because the system doesn't wait for open hours anymore. It reprices immediately based on these signals. 8 hours later, CENTCOM, with its negentropy, came out, and it didn't reverse Trump's post, but it definitely stabilized Trump's post from a complete blockade to a partial blockade of only Iranian ports. And that's a big deal. And it's interesting to me that he puts this out at almost 9 o'clock in the morning, and this comes out just after 5 p.m. So it sat for 8 hours to watch what the markets do. And it did exactly as I expected. It started to respond aggressively, and that's what we've been seeing in the dashboard. Pardon me. What is important here is that CENTCOM reintroduced an element of stability pretty quickly. That's not random. That is what you call management. So I've shown you in the past where in a chaos theory, in the system's perspective, rather than fall into complete chaos, you manage the chaos. This is the part where we're still in, and this is management of a chaos. So what CENTCOM did was add an element of stability to the system so that the markets didn't open up Monday with an oh shit. And that's literally what they did. Because once the signals start driving behavior and responses are timed around that market structure, the system then is in its own pace, right? It's no longer absorbing. It's actively being steered through it if we can inject. But otherwise, it will take on a life of its own, and you end up with an 1873, a 1929 style crash. And that's where we get to this. This is what happened in the dashboard once the blockade got introduced. We went from 40 to 50%. You see that? Went to 85 to 95% likeliness. And we went from a 2-week escalation to a trigger. In other words, what that means is if a trigger were introduced today, it would take about 15 days for that to be reflected in the markets with a catastrophic ends. Once that trigger was added, that constraint was added to the system, we went to 2 to 7 days. In actuality, in many of the dashboards, that's an average. It was showing 2 to 3 days. So we're talking hours, 24 to 72 hours, if that trigger were to come through. And that's where we were. That proved something. It proved the fragility of the system. It proved that discourse can impact the markets. They are people, right? And so what we saw here, though, was a turning point because that blockade announced a real constraint. And the moment it did, it crossed a line for the system. And what you're looking at is a trigger that is being reacted to in the markets in real time. And that is to just Donald Trump's post. Isn't that interesting? Don't you find that interesting? I do. So now we have a clear event, and you got full enforcement around the signal of the Strait of Hormuz. Again, that's not just a narrative. That's a physical constraint entering the system. And once that happens, everything else will price around it. Prices will go up, credit will contract, it'll start happening. So look at the top right. We go from, like I said, 85 to 95%. That's not even a probability anymore. That's a activation. The market was taking it as a near certain signal that there was a collapse underway. And so it began to adjust immediately. So your first impact is that energy flow is going to be disrupted, and that will be reflected in insurance and shipping risks will spike, and trading will then tighten, which we were watching. And this is really what your real economy is doing while you're reading Trump's post. This is happening at that time. And this is by the morning of the 13th. Like I said, Trump's post for the blockade is on the 12th. So now we go from a 10 to 20 day adjustment to a 2 to 7 day adjustment in condensing. What that means is a realized trigger near collapse will happen within 2 to 7 days. That's what that's saying. So now we're looking at the bottom, the trigger activation stage. Notice that this goes to high. It was over here at deteriorating, the high end of deteriorating, but that one post took it to high. It means Trump's words have impact, don't you think? But look what happens once the blockade was implemented. It goes back down. We went from 85 to 95% to 60 to 65%. Why did that happen? Because like CENTCOM said, it wasn't a complete blockade. It was a blockade only on the Iranian ports. And the country that suffers the most from that is China. They buy the most crude from Iran. So this is, like I said, the morning of the 13th. This is after both signals have hit the system. The trigger's already activated within the system, but we've already got stabilization being introduced. It's frail. Stabilization is being introduced by not disrupting the entirety of trade through the strait. And that's what you see here is critical, because even with an element of stability, the system is so frail that it's still a heightened risk of near collapse or absolute collapse. We're going from 4 to 7 days. That narrowing window didn't change even after the CENTCOM stabilizing message went out. That did not change right there. And that brings in Brussels and the UK, because now you're looking at oil flows that impact their economy. And that tells you the system it's positioning for a big move. It sees the risk, feels the risk, identified the risk. It's seeing it reflected in all the financial markets, the movement, and we're looking at now what's underneath. What are those credit conditions that are tightening? Because it's still moving, but credit now is getting very selective. It's much more cautious. And what that means is, typically, as credit tightens, you got to have better collateral now. Money is going to cost more. You can't just get your loans, and that behavior is already changing. We're seeing that, and it's becoming people. The market's getting defensive. They're being very careful, very cautious, and that's when you see that the system is doing everything it can to try to hold together, because now it's building even after a stabilizing, the risks are building even after a stabilizing message. So it didn't reverse anything. It did slow it down, as evidenced here, from 85 to 95 to 60 to 65. It did slow it down. But once you reach this level, the next move doesn't happen gradually. It actually happens all at once. So we're right at the precipice. You've heard that word a time or two, haven't you? Let's look at the dashboard for the next day. This is April 14th. Notice April 13th, we're at 60 to 65. On the 14th, we went to 70 to 75%. What happened? This is where you see absolute instability within the system. What happened? We had oil spikes. Risk jumped through the roof, and markets started to price a disruption not just because of the blockade, but because the risk was there. So just as quickly, later that day, oil did drop, equities did surge, and risk started to reverse. But what you're seeing here is a second force enter the system. What changed? And I didn't run the second dashboard, but it did go down. What changed? Tell you what changed. The expectation of negotiation came out. When you saw the post or heard the news about the U.S. ambassador to China meeting with President Trump in Newport, it was an expectation of a negotiation, and that immediately started to be reflected in the markets. So now you've got two realities, right? You got pricing that is showing a breakdown and a resolution that's giving you hopes of a solution. And that the trigger probability is at 70 to 75%, and the trigger path is 2 to 4 days. Because in other words, if the negotiation doesn't work, they're at a greater risk. But behavior is changing. There's no longer just a system adjusting. It's a system whipshawing, right? You're watching outcomes happen between liquidity and what's happening in real time. And it's, and it's due to the instability that's happening. So now you've got the point where the system isn't deciding if it's going to move, it's deciding which direction it's going to move into first. That brings us to this slide. I love this slide because it's highlighting, and I'm not expecting everybody gets all the terms on this. It took me a while to learn them, to be very honest. But what this is highlighting is what would break. What's the most likely path to a trigger to break? And the key here is simple. It's not a default that causes the system to break. It's actually a liquidity-driven chain reaction. It starts on the left with private equity, private credit stress. The redemption rates are beginning to raise, not because assets are collapsing, but because liquidity is tightening. They can't get their hands on dollars. Tightened credit means banks are not lending. There's no confidence, so they're not lending. Everybody's holding on to dollars because they don't know what's going to happen next. And that creates the first constraint, gates, limits, delays. And I showed you the slide last week where we saw gates entering the system. I realize this is yesterday's look, but watching for that to expand, which it has been, is what's really driving what we're watching yesterday and today. So now that means that investors can't exit. They can't go anywhere they want. They have to sell what they can, where they can, at the price that they can get, the best price they can get. Thank you so much, Dixie, for the shades. So we're looking at that. That's the actual next step. We're looking at selling happening. Which assets get sold first? The most liquid assets get sold first on the public markets, ETFs, anything with a bid on it can be sold. And so they're going from hard assets to anything they can get liquid quickly. And when that happens, then you now have kind of a feeding frenzy, right? Because that selling feeds into what comes next. And that's volatility, because that forces prices to drop. And volatility then, of course, rises. And when that volatility rises, systemic strategies don't wait. They sell, and they sell automatically. And now you've shifted from discretionary selling to a mechanical selling. You're going for the highest bidder at the highest time. You're looking at the candles in your selling market summaries. And so the trigger, that then triggers step 4, which is where you start to see the foreign exchange break. Foreign exchange is where all dollars are transitioned, right? You got, whether it's a Swiss franc, a yuan, a yen, they're converted to dollars and back from dollars into those currencies. That's where the global currencies are exchanged. And when that starts to break, it's no longer about positioning. It's about access to dollars, pure and simple. And that leads to our final break, which is liquidity disappears. And that's where we're at. We're at that point where liquidity is about to disappear. Isn't it interesting that we're sitting here on the precipice, on the cusp of a major negotiation between the U.S. and China? Do you see how we can plot what's going on? We're avoiding something. That's called, like Scott Bessent said, that's management. So I wanted to point this back out again, because this is key to everything we just walked through. Why did the blockade matter so much? Because that moved the system. It's not a narrative. the liquidity that caused that liquidity is what created the conditions that forced the markets to take a look, to watch what's going on. And after April 10th, with Trump's reset post, that was the narrative shock. We knew something was coming, but it changed expectations. It didn't constrain liquidity. It just changed expectations. So now that there's a real funding stress and selling is being forced, the system reaction is along a pattern, but it's expected based on how Trump put out world's greatest reset. I love that. And now look at the right side, April 13th. The blockade here. This is completely different because this introduces the constraint. The energy flows are definitely disrupted. Shipping risks did rise, and trade financing did tighten. Prices went up. And that flows directly into the foundation, dollar funding. And that dollar funding, and that's the key shift here, is stress didn't start up here, right? The stress started down here at the funding layer, and then it moved upwards through the system, through the plumbing, through the regulatory process, to where it affects the liquidity. And liquidity started to, you like my eagle? I want to thank Sherry in my chat last night. She suggested I use an eagle flying away to represent dollars disappearing. I thought it was a great idea, so I added it to all my slides. I hope you guys like it. It was a great idea. So this isn't happening because of what Trump said, but because of what was constrained. Oil is the engine of our global economy, and that is the key thing to remember here. So while Trump can say things that gets eyes looking, they're looking for other signs too, and that the U.S. isn't running the system here, but it is funding the system. So what the American president or the U.S. Treasury Secretary says matters. And when funding is constrained, everything reprices, not gradually, but all at once, as we saw with that blockade notice. So I'm hoping now you get a basic idea of what this post really means, because it isn't the reset you think it is. At this point, you've seen the structure. I've gone through the mechanism. I've shown you what causes the stress. But there are pathways through all of this. And once the system is forced to reprice, there's only two paths to take. Two. So I'm going to stop here for a second. Does anybody have any comments, thoughts, or questions on what I've been saying so far? I want to catch up on some of the comments. Dixie gifted me a set of shades. Thank you so much. Duppy, hey! Nice to see you in here. I'm glad you're in here. Thank you, Duppy. Where are we at? I have not kept up with today's news. So I cannot keep up. Thank you, Ann Boyer, for the compliment. She says great analysis here. Glad Feisty is doing her own shows on her own Rumble. Thank you, Tracy. So we are now looking at something pretty Dixie. God bless you. I really do mean that. I'm just scrolling through. Can you see I re-hit it? I don't know. Okay, so I guess do believe Trump just stated today that we've reached agreement with China and the straits are 100% open. He said that they are fully open, yes. His post is interesting. It's an agentropy, to be very honest. And what it's doing is it's calming the markets enough to get us to the negotiation table. I don't know what Xi conveyed through our ambassador to Trump over the weekend, but that obviously had an impact to where they were able to do that. So I realize people read what Trump is saying literally. That's not what Trump is doing. He's got to remember he's the signal master, right? And so his signal is, you can calm down for a little bit. We got negotiations underway, and that expectation is calming the markets just enough to keep them from collapsing. And I'm going to show that here as we move forward. So what actually breaks first? This is a critical thing to understand, because what actually breaks when the system is no longer stable, it's looking for one of two things. Either it's going to break completely or it's looking for an intervention. Trump introduced an intervention this morning. So it's not what most people think. What breaks is not the markets. It's not headlines, and it's not even liquidity. What breaks, at least not at the start, it begins with the rules, right? The rules fail first, but no one reacts, because the rules don't enforce behavior and they don't create liquidity. They only define the structure. So the system keeps moving despite everything, which is why Trump put out world's greatest reset. Changed nothing until he introduced the constraint. But underneath the surface, the plumbing starts to crack inside private credit, inside shadow banking, inside balance sheets all across the globe. And you begin to see liquidity being mismatched. In other words, long-term assets being funded with short-term money. That mismatch is what creates the liquidity crisis, because if everybody asks for the money at once, poof, it's all gone and nobody gets paid. And so, again, the Vienna moment. And so the liquidity promises that can't be met forces selling, redemption selling. And that's when stress becomes visible. The markets react, volatility spikes, systemic sellers start to kick in, and liquidity just virtually disappears in an instant. And more importantly, though, is correlation spikes, diversification fails, and everything starts to move as if in a choreographed dance. Everything moves together. And that brings us to the only moment that really matters, and that's the decision point. At this point, outcomes are no longer optional. This is the only moment that matters. Either liquidity is injected, and we'll get temporary stability, or liquidity is withheld and the system completely breaks. We did see some injection. So that has changed some. And then with Trump's post, again, it offers a temporary stability. So you're going to expect to see several of these kinds of messages coming up as he tries to do public diplomacy. He'll say something and then he'll walk it back. He'll say something, then he'll walk it back. He's literally playing that management game. He's managing the stress. And that is really key, because when the rules all fail and the liquidity is no longer there, you've got complete collapse. And that is not what Trump is working towards. So that takes us to the two pathways. And my contention, and I'm seeing signs that this is real, especially once I saw the sign about the U.S. ambassador to China meeting with Trump. There are only two paths, and either we're going to break it completely or we're going to manage that reset, and where intervention then can be used to help stabilize, even temporarily, help stabilize the system. Once stress reaches this point, one of these please excuse me. Once we get to this point in the stress, like I said, it's above 50%. We're looking at 60, 70, 75% stress. Probability of high risk to break the system. Outcomes are unavoidable at that point. So the system breaks, liquidity collapses, we got deleveraging, we got funding freezes. All of that's happening over here, and that's creating a panic in the market. We're, looking for and actually seeing signs of fire sales and dollars melting, right? Asset crashes. But on the other side, with the China piece entered into the discussion, China actually has a very real role in this game. I'm sorry. Where China can step in, I'm not going to save the system, but it will stabilize the system. It's stabilizing the funding chain. They've got the yuan. They got Project Enbridge. They've got a funding path. They've got an alternative set of plumbing. They can actually inject liquidity into the market. And remember, there's an incentive. They are the largest purchaser of Iranian crude, so this matters to them. And by doing that, they will slow or interrupt the dollar credit cascade that's already started, and it can delay the complete breakdown. So the takeaway to take from this is the system isn't failing automatically. The reset depends on how and whether China decides to participate, and all signals are that's exactly what China's doing. Exactly what they're doing. And we're now at the point where we get to talk about that out loud, right? The Trump card, because China is actually a counterparty in the negotiation. U.S. is the pressure to the system. And then you get these system constraints and then a China decision mode. This is where everything connects. This is not about a rescue. This is about negotiation. The U.S. applies the threat, right? They apply the pressure with the energy constraints, and that financial pressure goes through the dollar system, and that trade is threatened. Like I said, none of this is random. This is all systemic. It's designed to force an outcome, though. And that pressure flows directly into the enabler layer. Private equity, private credit, hedge funds, insurance balance sheets. Why? Because banks aren't lending. The shadow layer, the enabler layer, is what's keeping money flowing. This is where that starts to come out. And that risk, it's on their balance sheets, is starting to be is showing in real time. And this is where liquidity is actually starting to break, is at that enabler layer. And we're seeing redemption pressure build. That's the gating risk has started to emerge, and time to collapse has been compressed, which used to take months can now happen in days. And I cannot say your name, too-manyism. I don't know what that is. Too manyism. Oh, too manyism. I like that. You gifted a cookie. Thank you so much. So here we are. We're at this place where things are actually starting to break. And we're getting pressure from here. They're putting pressure on China. And it's like I said, it's not linear, but they're all key players. China holds the lever, though. It controls the timing. It influences the energy flows. And critically, it can inject or withhold liquidity into the system. So its role is not to step in and fix it. It's to decide the terms under which the system stabilizes. And that leads to the final point. China doesn't save the system. It's setting the terms for how it resets. They got some gives that they want, which is what we're happening in real time right now with the Spanish PM meeting with Xi, with the U.S. ambassador to China meeting with Trump. That's what you're watching right now, is China is letting us know what he wants out of this. If you want me to fix this, you're going to do this. And it's not that China holds the cards here, but this is a true negotiation so that every party comes away with what they need. Everything we've walked through is from the structure to the liquidity to the stress to points to the same conclusion. The system doesn't fail because of a single event. It fails when the liquidity can no longer support it. We've had many reasons for that. You've got all these wars. We've got unvarnished spending that's been going on. We've been funding everybody and their fraud. All of this is happening. It's created a liquidity issue. And what sent it to over the edge was the issue with Iran. And those dynamics are emerging in real time. We're seeing constraints be applied, but we're also watching behavior be changed. So now we're going to ask ourselves a question. What happens won't be determined by the headlines, but by who controls liquidity and who is forced to respond to it. That's where this really I want to land on, because people think of Xi as a happenstance player. But I want to take you down a different path, if you don't mind, because I want to step back. Trump has talked many times about how Xi has been working very well with him, the relationship they have. I don't know if you guys remember this. This is back in 2017 when Ariana sang in perfect Mandarin a particular folk song, Chinese folk song to Xi. It was so well done. Xi was very impressed. He called her an A+ child. On the surface, that kind of looks symbolic, but it isn't, because symbols carry meaning. The song Molihua, is translated as the jasmine flower, is one of the most recognized folk songs in China. But more importantly, its roots go back to the Ming Dynasty. That matters, because that places it before modern China, before communism, before the current political system. You don't have to agree with China to understand that the system can't resolve without it. What's being acknowledged here isn't just the state, it's the civilization. And that's a very different signal. It says we're not just engaging with your government, we're recognizing something deeper, your history, your identity, your continuity. And that matters in systems, because when pressure builds, we're not negotiating with a moment in time. You're negotiating with a civilization that thinks in long cycles. And that's where this ties back to the present. If the U.S. controls liquidity, China represents something equally powerful: scale, the size, right? Continuity, and the ability to absorb and respond over time. So when the system reaches that breaking point, China is not an option. Not because of politics, but because of position. And that's the point. Xi, like I said before, is not a solution. He is the counterparty. He's the negotiator. And he's being forced into engagement, whether it's willing or not willing. I don't know. I tend to think it is a willing engagement, because when liquidity constraints the system, it doesn't resolve in isolation. It resolves between the only actors large enough and necessary enough to stabilize it. And at that point, maximum stress, the system doesn't choose sides, it chooses who it needs. And right now, these are the two players it needs. So that is the rest of my day. How do you guys like that? I know that was an hour long, but I was hoping we can get everybody engaged into a conversation now with my chat. I will stop sharing my screen and just have a conversation. We'll just talk through. Like I said, I want to let you know, I did not follow the news today, so I'm not really up to speed on what's going on. So I'm going to rely on you guys to fill me in as to what's been going on. Cheryl Kathy, thank you for the can. Oh, the Foxhole family. Oh, it was so nice to see you guys. And then we got Unchained, gave me a can. You guys are really generous today. I appreciate that. Does that mean it was good? I guess that means it was good. Game theory, chess orchestration. Ha! Thank you. So, somebody in my chat room, open up your mic. Let's start talking. Hello? Am I all by myself?
Your point about liquidity, right? Because liquidity to me is, because in the United States at least, is the private sector, people investing in stocks, treasuries, whatever it is. Mm-hmm. That's liquidity. So maybe you have something that you're referring to it differently.
Thinking of it on a global market, it is. It's bonds, it's T-bills, it's a number of things, right?
Right. So that's looking pretty strong right now. I mean, it's not bad.
Yeah, funding, money is still flowing. I didn't say anything
for sure.
different. I'm not alluding to anything different. Money is flowing. But it's the illusion of strength. Right? It's not really strong. What's happening under the surface is even more important.
Flowing. I didn't say anything.
I didn't hear what was said. So
I have a...
Well, let me finish with Eddie and we'll get there. So, Eddie, it's not just what people are investing in. It's what... I'm trying to think of a great way of saying it. Liquidity is about liquid cash. That's where the word liquid comes from, right? So it's about what assets you have that can be converted to liquid cash and how fast, right? Without raising or affecting any of the markets. So it's it actually serves as a kind of a barometer for how well the markets can handle what's happening in the stressors in the market. So what I was showing you today is not that money isn't flowing, because it still is. Barely holding on, but it still is. All of the indicators that feed into those risks, though, that will lead to the ultimate where money stops flowing, are all showing orange and red. That was the point I was making. Does that make more sense for you?
So basically, the investors, the people, are feeling a little anxious about the markets. Is that where that stress comes from?
Anxious is an understatement, and it's not what you think it is. It's always financial, right? Because if energy is the engine of the global economy and energy is disrupted, which it is, it creates a cascade effect on the prices of everything else, obviously, right? So everything in the market is starting to reflect the constraint, the energy constraint that's going on right now. Are you right? You get it?
Yeah, absolutely. More for certain countries than others, right? You know, the United States, it does show stress on the United States, but like for Europe, way more stress than us. India, more stress. China, even.
This isn't even about a country. This is remember, the global financial system is interconnected. Every country is attached to it. And this is that global plumbing that's about to crash. In 1873, the pipe just completely broke. Today, and the same as in 2008, they kind of rerouted that pipe. That's where the enablers system layer comes in. But they rerouted that pipe, but now the enablers are struggling. So eventually you can't reroute. Eventually you can't divert from the inevitable. Eventually you get to a point where that pipe will break. And that's what these dashboards are highlighting, is that there is enough stress to be concerned about that pipe breaking, that plumbing breaking up. And then we have the energy crises in the strait. So it's interesting because Trump's post about the reset didn't change much. Personally, I think it's because the market's already going, duh. But when he announced a full blockade, it immediately reacted. And then when CENTCOM put out their post, it immediately calmed down, but it didn't go back to where it was. It was still heightened. So it's already edgy. The market's already at a point of, my God, their sleepless nights. They're having their darn Cass moment, right? Their sleepless nights are happening now. And when it gets to that point, it's no longer a decision to sell. It becomes automatic. And you start selling to the highest bidder that you possibly can get. And you're going to take grave haircuts, because you're probably not going to get the value of that asset as you sell it. Remember what you're trying to do. You're trying to get liquid cash. Does that change? Does that help?
Like a panic sell, right?
Yeah.
But does it have to break, or are we just kind of?
No, it doesn't have to. It doesn't have to break, but you're seeing signs of that. We haven't broken yet. How do we know that? Money is still flowing. It's getting tighter. It's being constrained, but it's still flowing. When money stops flowing, then it's too late. It's already collapsed.
That's right. And if you're somewhere around the world and you're not positioned for this, then, I mean, that's shame on you, right?
Yeah. Ducky, you crack me up. Just let those broken pipes flow into the Potomac. They already are.
Ooh, that was mean.
That was terribly mean.
Okay, so I want to ask you a question if I can. It's kind of a two-part, but we'll see. I'm reading here the trigger activation phase on your one slide. You're talking about how the triggers already entered the system and the markets are going to determine the speed. So like how fast we crash or don't, etc. And then you also talked about the shadow banking industry or facet of this being the one that keeps going when the standard structure of everything kind of comes to a halt. And I'm thinking about how someone was saying on another show, all that crude oil is stuck and can't be processed and can't be sold. And City of London, Brussels, Iran are going to start losing millions of dollars because that stuff is sitting and they can't get it moving. They can't make money. They're going to start selling to become.
Okay, that's with, wait a minute, before you go any further, that's with a complete blockade of the Iranian crude. Okay. The other problem that Iran had is they can't store anymore. They've used up all their storage. I think so. You got storage and the ability to move it, and it can't sit for long because it's crude. It needs to be refined. But today we find that it's being moved.
Okay.
So that's already changed that scenario.
So the speed is being slowed down.
So the what?
Because the speed of the markets determining, how fast people are going.
Right. So what just happened, and that's why that post is important about the strait opening up and such like that. What just happened is a real constraint, total collapse of the Iranian crude infrastructure was creating a systemic issue within global finance. When he said that blockade was opened, he also entered in a real key piece of information, and that's the expectation of a negotiation. Not only did he give you the expectation of a negotiation, but he told you that it looks like it could be resolved before King Charles gets here at the end of the month. So we not only have the negotiation expectation, but we have a hard timeline. So the market now will calm down. It's still not stabilizing. Don't think of it as stabilized. It's just not going off the rails right now. It's not going to go into collapse. It's just going to teeter at that high level of risk, constraint, and fear until the end of the month. Does that make sense?
Absolutely. And that timeline is phenomenal, because I was thinking we had maybe 30 days, which could still be the case. Okay, so
well, wait a minute. That is important. He's saying the hard timeline, it could be resolved before the end of the month. The Beijing summit isn't until May 15th. So that 2 weeks in the lead time is all negotiation focused.
All right, so let me ask you the second part then. So we have Spain, which we know was a puppet of City of London, entering into the picture to kind of counter our negotiations to take control back.
Are they countering?
Correct? I don't know. I'm assuming. I don't know.
Well, why would you assume that? Because if they were countering our negotiations, that strait wouldn't have been open today.
Okay. Done thought of it like that. Yeah. All right.
And it also adds the element of Brussels entering into the negotiations to protect itself, right? The rules.
Right.
Brussels is the rules. So you've got a system being forced to the table. Do you see that?
Yeah.
I don't know if y'all did you read Trump's latest post about China?
I read the one this morning. That's it.
Well, he put out another one, and it was I can read it for you real fast. It's China is very happy that I'm permanently opening the Strait of Hormuz.
That was this morning. I did read it.
Oh, okay, you read that one. Okay,
that's
good.
What I'm referring to.
Right, and now Iran has came out here just an hour ago saying they're permanently suspending all petrochemical exports, which, they can't anyway. But that's a sign to me that
what is that telling you? Before you go any further,
it's telling me they're
China's
speaking
happy,
to China.
Iran is not. What's that telling you?
It's telling me they're speaking directly to China.
Yeah.
That we're going to suspend all exports.
No.
to try to get China
No.
on their side. to try to force
If
China.
China is happy the port's open, suspending all exports would not please China.
That's right. That's right.
So we're
But
talking, we've already got proof of that, though. You got the Chinese ambassador talking to Trump. You've got the Spanish prime minister talking to Xi. We're bypassing Iran. Iran's trying to say, but hey, it's my oil, damn it, come talk to me.
right, but China, all the ports are open, but not in Iran. You cannot ship out of Iran ports.
You're not hearing what I'm saying.
And that's not the understanding. What you're saying.
Okay. So China is happy that the strait is open. In other words, China has an ability to get their oil. Where does Iran come off saying that they're suspending all exports? They had no way to export anyway. So that's just noise in the system. The conversation is between China and the U.S. That's clear. You got Brussels interested because that's the rules layer of the global order. What is going on with Iran? The pressure is still on Iran.
China being happy, I don't know. I mean, they were a lot happier by buying cheap oil from Iran and Venezuela, but now that's offline. So, I mean, I guess they're happy with what they can get, but they're going to pay.
Remember what they were
value.
paying Iran, though. So if they're paying $1 million a tanker to get the Iranian oil, and now they can reduce that price by 500 billion or 500,000, because even though they're paying elevated oil prices from Oman or one of these other countries, it's still cheaper than paying $1 million a tanker, isn't it? Remember that constraint?
Oh, that Iran was charging the
China.
tankers to pass through?
Iran was charging China $1 million a tanker to get oil.
Now, Iran disputed that. They said they weren't charging their friends that. Which was Pakistan. Now, I don't know. I'm not on the ground.
The only country we know, we don't know about Pakistan or India. We don't know how much. We know that there was a fee being charged. We know for a fact that the Philippines got free pass, but it was well documented that China was paying $1 million a tanker. So are you trying to say China's not Iran's friend? Maybe they're fair weather?
I would say China is Iran's friend. Absolutely.
You would say, but I'm not asking what you would say. You have no voice in this story. What is Iran saying if they're charging China $1 million a tanker? Evidently, they don't see China as their friend. And the whole idea of military assistance and all that other stuff. The only thing we found out is that Iran bought a drone 2 years ago. If that's all that's been going there, then I think they would have a bit of a bent nose. They let Venezuela down. They let Iran down. Remember, China was on ground in Venezuela, did nothing. We've been after Iran all this time. China has not stepped up to that table. So it could very well be that relations between Iran and China have soured a bit, and Iran decided to charge $1 million a tanker. Does that make some sense?
It could. It could make sense.
So where do you go from here?
I mean, where can we go? We'll just let it play out, see what happens.
Yeah, we do.
Feisty, do we not need to pay attention now to the bond market, or could that be, a silent signal?
That's
still?
also a signal. People will typically move into T-bills and such like that.
Well, I'm waiting for the water to get rocky on the other side, because I figure we have to have some big thing happen. Maybe not. Hopefully not. But it's like, this is almost as if it's too good to be true.
Razor Romano, are you saying you followed me on X? I get so many people starting to follow me. I can only follow so many back, so I will try to do that. And I didn't hear what you said, Anne. Sorry. Oh, unpilled. Okay. I'll see that you followed me. I will follow you back. So anybody else have any comments? Or are we... Okay. Wars don't cause casualties. Oh, you're talking about Putin. Anybody else have any thoughts? I hate to see that this is ending so quickly. It's only not even 5:30.
I have a question.
Go ahead.
What does King Charles visit here? What does that signal? I mean, you know it means something. The timing is just so.
I love the City of London connection, don't you?
That's kind of what I want.
Seems to me that the global order is being forced to do something it didn't want to do. It's always fought doing that, but it seems to me that that's what's going on. And we'll have to see what changes in Europe, both through Brussels and the City of London. We'll have to see what changes as far as public policy, and if they do continue to put up windmills instead of really becoming a valuable player on the global market. And it also came out today that Trump, was it today or last night, that Trump said he thinks he likes Starmer.
Yeah, that was actually quite funny. I'm like,
Yeah.
okay, what's up, you know?
There's something going on, right?
Absolutely.
Newbie one, I went through the Pope just yesterday, Monday on the show. People will soon start to understand that these global leaders are all working together. And it's not that there's some grand scheme here. There's a vested interest in getting back to stability and fixing the systemic problems that have created all this mayhem. And they all have a role. Anybody else? What are your thoughts? Keep talking, please. We got a half hour to burn through, guys. You better keep talking.
So the EU have a big meeting on Friday. I think Stan is attending that.
Say that again, Leslie. I'm sorry.
I think there's a big meeting with the EU. I don't know if it was Friday or
There was an emergency meeting at the EU on Friday, yes.
Yeah, that's it.
Which is
So
why I
that's
find
quite
it interesting that the Spanish Prime Minister went and met with Z directly.
Yeah, he seems sort of incognito, doesn't he? He's not unimportant, or hasn't been, for him to be the spokesperson for the EU to see.
Well, more like nobody would have noticed his movement until after it was done, right?
Yeah. So perhaps Stan is going to put a spanner in the works on Friday. A directive from our Mr. Trump.
Anybody else got
Got
comments?
everybody talking.
Yeah, nobody's
It's
talking.
got
What the
everybody
heck?
talking.
Okay. If you've already talked about this, just tell me to shut up because I just got on here a few minutes ago. But did you hear what Vice President Vance said about Pizzagate and?
No, I have
Grape
not
jelly?
kept up with the news today.
Okay, I'll
That's
try
what-
to find it and post it.
Like I
He said
said,
it yesterday.
if you want me to talk about something, you're going to have to give me the overview. I've been a little busy. Didn't you like the presentation? That took a bit.
That was the
I-
non-presentation.
I missed it because I just got on here. I'm sorry. I'll do it.
Okay. It'd probably be better for tonight's chat. If you can't summarize it and have a discussion, I'm happy to do it before tonight's chat.
Thank you.
So there's an absolute like timing set when this stuff is going to happen.
Mm-hmm.
Very, very controlled. It's not going to just blow apart one morning without them knowing that it's happening, right?
I don't even know. Got a person here saying, I think the Iranian rulers are insane and want a land war or planetary collapse. F them and their tiny camels. Just going to point out something pretty obvious. What is it? Jonin OKC 07? 007? Something pretty obvious. If you've taken out the IRGC, the supreme leader is dead. His son is in a coma. Who are the Iranian rulers that you want to F off? Because I think maybe some of the commentary that's stuck in your head isn't updated with what's going on today.
I have another question or thought. If I can just bump back in here for 1 second. Are we going to see the shadow side of things? Are they going to reveal themselves who they are as they get angry at what's happening and they start losing all their liquidity? Will we get exposure?
Say that again.
Okay, you were talking about how, we have the two sides, so the shadow side, the private equity side, and then we have the regular side that the world sees, the front-facing view in one of your great slides, one of the middle slides. So as things start to degrade quickly, are we going to see more exposure on who some of those shadow operators are in the background that we may not realize are actually not our friends as they start screaming when things collapse?
Well, let me point out my final this series that I've done. It's now my 5th show on it. My final series is on accountability, and you will see it. You'll see exactly what you're talking about. So I just heard what Vance said. JD Vance says Trump narked on Epstein and Epstein hated him for it. I have to defend the president on this. When he said Epstein was a hoax, he is talking about the Democratic idea that he was somehow Epstein's best friend, which he wasn't. President said he knew him and was a scumbag, but what you see in those emails is that Epstein hated Donald Trump. One of the emails is about Trump narking on him to the local sheriff. If you recall, Trump actually talked to the local sheriff. He was the only one that did. So another thing JD Vance said, Jeffrey Epstein had extraordinary connections with both intelligence services inside and outside the United States, which we've proven, and we've gone through those emails. There's one email I read where one person sent an email to Epstein about pizza and grape soda, and I remember it sounded like a Pizzagate conspiracy, and my reaction was, we should absolutely investigate that person. Okay, this is where Sparkle Lee comes in, because we went through all those posts about grape soda and pizza, didn't we? And what did it turn out to be? He was a doctor. He was Epstein's orthopedic doctor. He's the only one that ever mentioned grape soda and or pizza. And he just happened to like it.
I just thought it was interesting that Vance was bringing it up.
I hear trap. I hear trap. Because people are passing around stuff and not going to look for themselves. I hear trap.
That sounds reasonable. I can accept that.
Okay, so we also know Frazzle Drip is fake. It's in the Q posts. Lauren Bobert, I absolutely want to know what was the secret folder that was titled life insurance. that had Frazzle Drip, where people get the Frazzle Drip story from. Nobody got the Frazzle Drip story from that folder because that folder's never been made public. Frazzle Drip story came from another source, and Q told you it was fake. So the people that are still passing it around amaze me because it's right in the Q posts. So I do think we're coming to an inflection point with that. I can't wait. I'm so tired of the hype.
Amen. There's also going to be a lot of influencers in media that are starting to get popped off. They're going to end up being publicly outed.
So one of the things that happens as you get to a key moment geopolitically is the noise gets louder. It's so obvious how loud the noise is that it's a distraction from something they'd rather you not look at. And one of the obvious things is the economic situation. People know money is tight. People know things are getting expensive. They don't realize how close we are to a collapse. So the distractions serve to keep the public going on something other than what's sitting right in front of us. They did this in 2007. They're doing it. They've been doing it again all this year. So I'm just going to caution that. I don't know what else to add to that comment other than that. So since we don't have a lot of conversation going on, I want to thank everybody. If you're not in my Telegram chat, please download it. The link is in my profile on X. It's also, I believe, in the profile on both Rumble and Pilled. Join the chat. Join us at night about 8 o'clock. Every night we start with prayer. About 8:30 we open with regular chat. And we'll go until people stop talking, which lately has been pretty quick, usually within an hour and a half, but we'll see how it goes. That said, please, if you like my work, I appreciate it. Consider donating. My Cash App and Venmo are in the banner. Plus, thank you so much for the contributions here on Pilled today. I very much appreciate that. It helps more than you know. It helps keep me going, too. So that, I want to thank everybody. So many people claim that they have seen Frazzle Drip. You know, Duppy, I know, there is a video that's going around. But it's amazing me that people don't look at the Q post to see that Q actually told you it was fake. And it will go around. It's one of those evergreen posts, right? So with that said, have a good day, everybody. Look forward to seeing you tonight in our chat. We'll talk to you soon.
Thank you, Feisty. Great show.
You're most welcome. Thank you.
Thank you.
Thank you.
Thank you.
Oh, come on. Where is it?
Whispers in the static, questions in the fire. The veil Claws of reason, eyes of flame, unmasking the players in the shadowed game, where the silence breaks, the hidden shakes. She names the unspoken,